Bitcoin is currently one of the finest prospects for investing that are accessible to everyone. And many investors continue to believe that they may make substantial profits from the digital currency Bitcoin, despite the fact that the price of Bitcoin is subject to dramatic volatility. But this statement has never been truer to investors than in the current deep of the crypto market. Bitcoin has come from a high of $69,000 to lows of below $20,000. Talk about a stub in the chest. But for the careful eye, is history repeating itself for Bitcoin? Hello and welcome back to Crypto Cash Channel. What's your take on crypto's current volatility? And what are the charts showing? In today's video, we look at what the possibility that history is repeating itself for Bitcoin. But first, before we go on, a sub to the channel would be very appreciated. Comment, share the video, and don't forget to leave a thumbs up for the video. So, let's get into it. Bitcoin's price stayed below the psychological barrier of $20,000 throughout the weekend, indicating a lack of urgency among buyers to make purchases at these levels. The bears are now attempting to drive the price of Bitcoin lower below $19,000. The present downtrend in the price of Bitcoin is the most severe in the whole lifetime of the cryptocurrency. However, the value of Bitcoin on the market has dropped by 56.2% since the beginning of the second quarter of this year, according to research conducted by the crypto analytics business Coinglass. This was Bitcoin's most dramatic slide since it dropped by almost 70% in the third quarter of 2011. A substantial amount of the loss happened during the month of June when Bitcoin had a decrease of 37%. And this was the worst monthly performance for Bitcoin since September 2011, when it experienced a decline of 38.5%. But it is not only crypto investors who are holding their breath. The bear market is having an impact also on other markets as well. For example, the equity and bond markets in the United States have both had a rough start to the year. There is also a drop in the S&P 500 for the first half of the year. And on the other side, the Nasdaq has reportedly seen its worst performance ever, plummeting by 29.5%, as reported by Fox Business. And that's not all. The Bloomberg U.S. Aggregate Bond Index reportedly saw a decline of more than 10% in 2022. So, what are experts saying about Bitcoin? Well, the outlook isn't entirely bleak for those who have invested in Bitcoin. According to the findings of their analysis, experts at Deutsche Bank named Marian Laber and Galina Pozniakova predict that the price of Bitcoin might reach $28,000 by the end of the year. The consensus among industry experts is that the S&P 500 will recover to the levels it held in January, which may act as a driving force behind Bitcoin's price increase. But what are the charts saying? Last week, the price of BTC declined and fell by 8.24% to end at $19,292.45. And despite the fact that the 20-week EMA is moving in a downward direction, the oversold RSI levels indicate that a short-term comeback is a possibility in the near future. If the market manages to break above $22,000 and then closes above that level, it will indicate that investors are getting more confident. In the event that this transpires, buyers may have rushed in to purchase the dip below $20,000. As a consequence of this, the potential for an upswing at the breakdown level of $28,639 has increased. But if the price of Bitcoin drops below $18,500, the BTC/USD pair may reach a low of $17,574.60, which is far lower than what is often considered to be possible. In the event that this support is breached and closed below, the downturn might resume. After that, it's possible that the pair may fall to $13,839. The analysis of the Bitcoin price suggests that bears are in control. Nevertheless, there is a possibility that there has been an excessive amount of selling in the short term. In spite of the fact that buyers attempted to make a recovery on July 1st, the fact that the wick on the candlestick for the day was stretched out indicates that bears are selling rallies to the 20-day exponential moving average. A positive implication may be drawn from the fact that the bulls have prevented the price of BTC from falling lower than $18,585. But if the price is able to move above the current level, buyers will attempt to push the pair beyond the 20-day exponential moving average. The pair has a chance of moving up to the 50-day simple moving average if they are successful. But, if the price continues to fall from its current level or the 20-day exponential moving average, the next possible destination might be $17,574.60. If this level is broken, the pair may start the next phase of the fall, which may be bearish. But why is crypto coming under the most pressure? Truth be told, the values of cryptocurrencies are coming under pressure from a variety of different issues. And the market attitude has been thrown off due to recent events, including the failure of the sister token Luna and the so-called algorithmic stablecoin Terra USD. It turns out that algorithmic stablecoins, such as Terra USD, do not have a reserve of assets. Instead, the $1 peg is under the control of an algorithm. The present bear market, which is often referred to as a new crypto winter, is currently putting the resiliency of other initiatives to the test. At the beginning of the month of June, the algorithmic stablecoin known as USDD is serving its relation to the dollar. It also has its own organization, Tron's Decentralized Autonomous Organization Reserve, where stablecoins like Tether and USDC are kept safe. This organization is also responsible for maintaining the USDD to $1 peg's strength and consistency. So, the possibility that Celsius may become bankrupt, which could have repercussions for the rest of the cryptocurrency industry, continues to be a source of growing concern. But why is Bitcoin, the so-called hedge against inflation, crumbling under pressure? Well, particularly vulnerable is the cryptocurrency known as Bitcoin, which can no longer be employed as a hedge against inflation and is currently trading like an unproductive form of technology. Anastasia Amoroso, Chief Investment Strategy Officer at iCapital, told Yahoo Finance in an interview that she believes Bitcoin is still a valid form of currency. According to her, there is price support at around $15,000, which is about equivalent to the cost of production. The prices at which larger enterprises are able to mine Bitcoin while still turning a profit are referred to as the production costs. Even though the point at which a mining rig becomes profitable is not the same for every rig, some of the tectonic headwinds that are concurrently impacting the landscape of the cryptocurrency market include the Federal Reserve's tightening of fiscal policies, the collapse of Terra USD, and a liquidity bottleneck as a result of the sale of speculative assets. But according to Amoroso, he supposes that this is kind of a beautiful cleansing technique. It is essential to sort through all of the useless apps and concentrate on the programs that offer genuine benefits and may be put to effective use. But it isn't the currencies alone that are feeling the heat. Several companies associated with cryptocurrencies, including BlockFi, Coinbase, and Robinhood, have all indicated that they would be reducing their workforces in an effort to reduce operating costs. Bear markets are characterized by a significant decline in the value of an asset of at least 20% from its previous high. But according to the case at hand, we suppose that they come up with another term because we are facing declines of above 60%. And now you might be wondering, how are miners being affected? It would appear that since the price of Bitcoin has dropped precipitously over the past half year, many different groups of market participants, including miners, appear to have given in to fear and given up. Since the large exodus of miners from China to North America, they have been steadily stockpiling Bitcoin and aggressively adding to their holdings of coins since that time. However, as a direct result of the recent dips in price, a significant number of miners are selling big volumes of their Bitcoin. And as if price decline is not enough, the increase in the cost of energy has caused some companies to find that mining cannot be economical for them, which has led to capitulation events. But when everything is taken into consideration, there are certainly bright spots that can emerge in the midst of crypto winter. For instance, during prior market downturns, new blockchain initiatives received more fair value propositions and widespread acceptance of cryptocurrencies at more affordable rates, which made it possible for existing tokens to expand more effectively. Currently, the market appeared to make a decision on whether cryptocurrencies are valuable assets while simultaneously terminating those cryptocurrencies that do not offer major use cases. But even so, you have a fantastic potential to expand even in bear markets. We've undoubtedly witnessed a lot of projects that weren't built on sound foundations being completely obliterated by the several bear markets that have occurred, like the one in 2018. And that is just history repeating itself. And that's all for today's video. Do you think the price of Bitcoin will go lower or higher from its support of around $20,000? And how long will it take for the whole market to recover? Also, if you are interested in more videos like this, make sure you like this video and subscribe to our channel. Don't forget to turn on the notification bell for more amazing videos. See you in the next video.